Tyler Vinson joins me here today. You can learn what his team is up to, and this is a unique one, folks. RETokens.com, RETokens.com. We're going to be talking about tokens, real estate investing, and the blockchain. Let's use that buzzword here. RETokens.com. Really appreciate your time here, Tyler.
Yeah, I appreciate you having me. I'm looking forward to it.
Well, we're gonna just kind of do a truncated version of this because uh, real estate investing for most people seems to be accidental at best, and it's this rare case where see you're giggling already because I know
Right.
that's the case, right? Like,
Yeah.
what's your story? How did you find your way into this?
Yeah, it's almost as you said. I had a friend come home from college, and he was attending UW over there in Seattle, and he said, I've got some friends that are looking into buying apartment buildings, and I thought, that sounds like a pretty cool career. I think I'm interested in that, and so he dragged me to an educational event, and unfortunately, that one wasn't very good. I do a lot of educational events or have throughout my career, but this one wasn't very fantastic. Needless to say, he got me to take action on it, and I called in sick to work and signed up, and we did a few day seminar there. And as mentioned, it wasn't of the quality of some of the others I'd been to, but when it was over, he said, "Let's go buy some real estate," and that we did. We went out and started learning and building a network, and started out by just buying a couple of duplexes and jumping in.
So what you got going on here now is a relatively a new concept, but prior to this, did you do syndications? Like what was your steps just prior to doing RE tokens?
Yeah, and I think really my whole real estate investment career is why I fell in love with the tokenization of real estate and what the future of that looks like. But a little bit of background on me, as mentioned, we started out buying a couple of those duplexes, and I really just fell in love with the sport of real estate investment. So ultimately, I quit my job and I got a real estate license and started on with a firm, but I immediately just asserted myself as a real estate investment specialist. Got on with a firm that worked with private investors, and they used real estate brokers, who that was my job at the time, to go find and negotiate these deals. And it was a lease option program. So there was kind of a built in pre screened tenant. And I would put that package together, and then they would sell it to investors. Well, after the first couple, I would be on the phone as well. They found that I was more effective at selling the investment packages to the investors than the investor manager was. And that kind of became, a big stepping stone into raising private money, which is something that I did. But no, most of my early days, I did do some joint ventures, and then I did a lot of debt and creative debt. I do a lot of seller financing stuff. The syndications started for me about 7 years ago or so, when I was getting into larger projects like larger apartment buildings, or I own a Class A storage facility that we did a syndication on. And so when I needed to get into the multi-million dollar raises, that's when I started really learning about the world of syndication. I did JVs, and some people call those syndications as well, where you have one or two other partners in there. But when I'm talking about syndications, I'm really talking about securities, where we go out and raise money with multiple investors.
At what point did this whole concept of the blockchain and tokens come into play, and when did you make the connection that maybe you could use this or leverage this with real estate?
Yeah, it's always been my dream ever since I very first stepped into the space to really be almost like a one-stop shop for real estate investors. Because when I got started, the guru would tell you something, and then you would go talk to an attorney, and they would tell you something, and that was definitely different than the mortgage broker was going to tell you, and even your CPA wasn't on the same page, and you had to go forge all these relationships yourself, and the real estate broker really didn't know much about investment. and it was a serious chore. And so, this is about 25 years ago now for me, so I'll date myself a bit. But it was originally my goal, and when I founded the real estate investment brokerage that I did, it was about being that kind of one-stop resource where folks could come in. So I've always looked at serving many and trying to get as many people involved in real estate investment as possible. But it's really difficult. First of all, the entry barriers are high. And then, I got into teaching a little bit, but even then, very few actually had whether it's the time, the commitment, or the belief system to actually get in and be able to invest in real estate. And so I was at I used to be the president of NARPM, the National Property Management Association. And I was visiting with somebody there who was working on a blockchain project. He was working on, these were actually utility tokens, basically community tokens for apartment communities, which is a neat concept. But I've always been on the investment side. And so there's really two uh, sides of the token, pun intended, that really brought this together. One of them was really just looking to solve my own challenges. I've been in real estate a long time, so it's very often I'll have millions of dollars locked up in equity, but it's trapped equity, it's illiquid. And if I want to make another investment or overhead, or all I do is invest in real estate, so lifestyle, any of those things, I either had to sell the asset in total, which I didn't really like to do, or I had to go to the bank and play by their rules and go through a complicated cash out refi. So real estate's illiquid, and that became a challenge. Around this same time, I used to coach my daughter's soccer team, and we came off the field after a game, and I had a good friend of mine from high school come up and, "Oh, Tyler, how you doing?" And after the hugs and the catch up, she just said, "It's been really cool to watch all the things you've done in real estate and your success there. And my husband and I, we've been working really, really hard, and we've saved up some money, and we'd love to invest with you." And we both just kind of stood there, and she answered and she said, "But we don't have enough money, do we?" And that just broke my heart. And so then I just kind of felt like there's got to be a better way. So I started looking into the blockchain piece a little bit more. And it's like, man, if she could just invest into some of these projects I was doing, because at the time, and most of us syndicators, you're looking at least a $50,000 minimum, and they need to be accredited investors most of the time, depending on what
Mhm.
exemption you're using. And I just seemed like those two things would, could, and should be brought together in the future. And that's where I realized that if you could get this ecosystem built out, then you could take things like, let's say I did recently tokenize a storage facility, and if that storage facility was up and available for my soccer mom friend, whatever they did have saved up, maybe that was, I don't know, $10,000 or something like that, she would actually be able to buy into that project. And that's not something I could offer her or a lot of the other people that desired to get into projects that I was doing. And so not only did it limit my scope of investors that could get involved, it definitely limits their access to these types of things. And as we've seen in inflationary environments, if you had a lot of assets the last 7 years or so, that was very good for you. But if you didn't, you kind of got pushed the other way. And that doesn't seem like a great long term sustainable plan to me.
So you tokenized your storage facility. What's the process like there? Let's say somebody is and maybe we even need to talk a little bit about how does your platform work? Like does
Mhm.
are you planning on letting people like me bring in their apartment building and tokenize it and then selling tokens or shares of that property to individuals?
Yeah, 100%. I would say that's probably the biggest difference between RE tokens and most of the other tokenization platforms or companies out there. Most out there are tokenizing a fund or properties that they acquire, that's their own deal, and then raising capital by selling those tokens. But we do actually serve third party, where we work with, let's say, clients like you to tokenize a property or a portfolio. And what that involves is, if it's not already a security, then we need to make it a security because it's going to be compliant. We're going to want to sell it to the public and ultimately non accredited investors. So there's securities paperwork. But what we do with that securities package, those documents, is we do what's called mint real estate security tokens. So I want to kind of try to oversimplify this a little bit to say, what is tokenization in the first place? Like, what the heck is it? And so, if you're familiar with syndication at all, or your listeners are, when you do a syndication, you normally do an LLC. And when you raise capital on that LLC, you're going to sell membership units, is technically what they are. You could call them shares, but you're going to sell these shares or membership units of the LLC in exchange for equity in that entity that owns the real estate. Well, what tokenization is we make those ownership shares or units digital and put them on the blockchain. And when you add that digital ownership component and put it on the blockchain, that's called tokenization. And the one of the advantages in the first place, there's a lot of advantages to it, but right along these lines would simply be, if you're normally a limited partner in that, not only are you stuck in that deal for 3, 5, 7, 10 years, or I've even heard of deals going on longer than that, you really don't have anything. You just, whatever that operator does, they do. Maybe they sell it, and maybe they cash out refi. And they're typically pressured to do one of those two things to deliver returns to their investors, but you're kind of along for the ride. So when you tokenize, especially like with a platform like ours, you actually have your own account. You can custody those tokens yourself. So you can do things like estate plan with them, or like, let's say you're in for $100,000 and you made another 25,000. You want to harvest some profit and diversify that, or do some things. You can actually maneuver on your own or sell those in part or whole in a secondary marketplace called an ATS. So that's so to answer your question before that, like, what does our platform do? How does that work to tokenize something like the storage facility? So that's what we do. We just take the securities package, we mint these real estate tokens, so the ownership becomes digital. We record it on the blockchain, and our platform shows exactly who owns what in the tokens. There's a wallet infrastructure. I just want to take a minute on this, especially if there's any crypto enthusiasts or people that are scared of the crypto side. This is not crypto; these are securities. So I do want to make that distinction. Um, but when you do these secure, actually, you know what? I'm gonna circle back to that. I'm gonna just start with minting those tokens. So you mint the tokens, you put them on the blockchain, and then we've got a cap table on our platform, so you can see who owns what, and those are distributed into the wallets of each of these individuals. So in the early days of tokenization, it was like, bring your wallet, try to connect, do all these things that belong to the crypto world. And what we found is it's much better to have a Web 2 front end and a Web 3 back end. So when you are looking at, say your tokens in there, or you're managing those, it's much more like you would expect on your bank account, right?
Mhm.
Where you're used to that type of interface, and you really don't ever see or deal with the blockchain unless you wanted to go verify ownership. So those are on in the platform, and the GP can hold their shares, the LPs or the investors can hold their shares, and not only can you buy, sell, and trade those. In the very near future, we're working on some relationships where you can actually leverage those real estate security tokens. That's something that hasn't existed before. So this is really a big liquidity play on real estate, the ability to provide liquidity to the investors instead of being stuck in these deals for, 5 years, 7 years, 10 years. The GPs, us as syndicators, our big paychecks is normally when we sell the asset or when we do a cash out refi. But now we're not forced to sell the asset and make everybody else sell the asset. If we needed a couple $100,000 to make another investment or do what we're doing, we could actually sell those on a secondary marketplace. Or what's coming in the very near future is you'll take your real estate security tokens, these ownership shares, and you will be able to get loans against those. That will give you liquidity right away. Those loans will settle the same day. And your real estate tokens are the collateral. So it does not jeopardize the title of the building. You don't need permission from the general partner or the operator. If you need to access some liquidity, you can do that via loan. You can do that via selling it. You can give it to charity. You can do what you want with your assets. So it's just a whole new control level. And when you have that level of control and that mobility or liquidity, you also have the opportunity to diversify a lot more depending on what you're looking for, be that a deal with tax advantage, a cash flow deal, or a deal with strong equity upside. So just a lot more options and liquidity for that.
Yeah, thanks for that clarity. That and I get it. If this might sound a little complicated to a few people, but I want to send you to retokens.com for more information and see if this is a good fit. So it's retokens.com. And we're kind of getting nerding out a little bit on this, but when it comes to the blockchain and the like, this I think it's fair to say that what you're creating here is for the everyday investor who may not understand the technicalities of a few of these steps, but it does let them participate on in real estate with a smaller dollar amount to begin with, but also being able to diversify into additional investments in a much faster fashion.
Mhm. Yeah, absolutely. I would almost make the argument that even some sophisticated investors don't always understand the real estate investments that they get into, because this is a private placement world versus say a public investment. But one thing to know about our platform and what we do is everything's SEC compliant. So anything that an investor purchases, not only will all of the information be front facing where they can go through and do their own research, these things have been underwritten and validated by an SEC compliant broker dealer, which will be us in the very near future here. So we've made sure it really is a massive fraud reduction piece, because when it's in the blockchain, you know exactly who owns what leverage is there. Everything's transparent, and being able to rely on that transparency is really strong. So yeah, I when we nerd out here and you're in good company with that, um, yeah, it almost overcomplicates it. But the reality of it is, it doesn't need to be any more complicated than somebody getting on their Charles Schwab account and buying and selling a stock, or for the crypto folks on there getting on their Coinbase account and buying and selling crypto. That user experience is very, very similar, except we're talking about a real piece of real estate ownership with the K1 tax benefits, the appreciation upside, and the cash flow. I mean, we're talking about a world where tenants can actually own a piece of the building that they're renting. And when the rent raise comes every 12 months, instead of getting really upset about that, they can actually participate in that upside.
Yeah, that adds a whole new paradigm to some things.
Yep.
Do you have people on your platform today actually pitching some of this, like, to their residents? Like, you can own a piece of this building?
Um, so right now on the platform, we've got, I think, 4 projects on there right now, and one of them is a hospitality multifamily, and they are actually building utility into the ownership of these tokens. And so because I'm not a licensed broker dealer, I can't promote specific deals right this minute. That'll change in about a month here. But what I can say is we do have deals on the platform that people can look at and check out and invest in right now. And I can share the fact that we've got another project under contract that we're working on right now, and that is exactly what they're doing. Is they're not only creating ownership for the tenants in the building, but they're adding in utility, meaning benefits or perks. This is hospitality, so X amount of nights, if you will, or certain amenities right into the ownership of that token. So when somebody later, if they sell that in the future, not only do they get the actual ownership piece, but there's additional things you can add in to that ownership that really hasn't existed in the past. So we do have a project like that on platform now, and we've got a large project coming as well.
Yeah. That's kind of interesting. Hospitality, I suppose you could bake in quite a few different incentives, free night stays and what have you.
Mhm.
What you've brought up the SEC regulation. I mean, you had to have been blazing some new trail here. I mean, when people hear blockchain and they associate it with Bitcoin, it's kind of the wild, wild west on some of this. But what I think this is especially appealing is the concept that this is actually backed by an actual property. It's not. Could you talk
Yeah.
a little bit about that process? Like how has it been to get SEC regulated like this?
Yeah, yeah, and so let me be clear, we are, in the final steps of our FINRA, broker-dealer ATS application, which will be registered. The offerings on our platform right now, are Reg D 506C, securities and compliant. But you brought up a really good point. A lot of times people are like, "Well, I wanna wait and see how regulation pans out on this. Let's see what happens here. I'm really not sure what's going on." And I think that it's due for some education in this area. When you're talking crypto, which again, this is not, although on the platform you'll be able to use crypto to invest, right? But this is not. These are securities. And so in the crypto world, there's a huge effort by that community to not be a security. And that's the whole problem and the vagueness surrounding the regulation. Does it pass the Howey test? Is it a security? Is it not? Well, what we do, we are raising our hand and saying these are absolutely securities. So they have PPMs and op agreements, and if it's a Reg D form filings, and all of those things to make sure that they are SEC compliant. So what Reg D 506C is for syndication, not just for tokenization, is it is an exemption for a private placement where you don't have to register that with the SEC. For what we're doing in the secondary marketplace in a broker dealer, we have to go through a massive regulatory process with FINRA and demo our software to them, and 400-page application, and you have to have these series 24 series 7 executive team. So it's extremely intense to be able to launch this marketplace, because when we resell them on the secondary market, they're reselling under a resale exemption for private placement called Rule 144. And under Rule 144, there's a list of things, five major components that the offering needs to comply with, because the SEC is all about protecting the investor, and we're all for that. So in the securities world, or I should say the tokenization world, it's actually crystal clear. We're not waiting for clarity in legislation. I'll put an asterisk to that and come back to it. But for what we're doing, we're following current SEC laws and regulations. We're following all the current compliance or exemptions that are out there. So it's really crystal clear for us and our attorneys. We don't feel like we're operating in any level of gray area. If it doesn't meet current compliance and regulation, then we just don't do it. Some of the big things that have changed that have allowed this industry to adapt is the Jobs Act. that was passed, and some of the regulatory framework around that, making it easier to raise capital. And now blockchain has allowed for different custody solutions with the tech like our platform to be able to move those shares around. There is no secondary market today because I mean, if you and I are in a traditional deal to trade or sell, it would be like, well, I don't know. I guess let's kind of negotiate a price, and you get your attorney, and I'll get my attorney, and we'll meet at somewhere, and we'll hash this out. I mean, that's why it's really not done. But when it's all transparent and you can get it done with a few clicks of the button, that's going to be much better. So we fully operate under current SEC regulation and compliance. The pin that I put in, or the asterisk that I put in earlier, is to simply say that there is opportunity for legislation to open things up and allow our deals to do things that the tech can do that current regulation does not allow for. They group tokenization into the digital asset category right now, and that is starting with this new regime to experience a lot of change and a lot of flexibility. So that will allow us to enhance the tokenization that we're doing today and continue to take advantage. I'm really going to geek out now. Continue to take advantage of some of these DeFi protocols, DeFi meaning decentralized finance, and things like loans against real estate tokens will be more common, banks being involved, crypto for real estate, multiple currency transactions, and it'll be all captured on the blockchain. But the key is, with all those moving parts, to understand that it's our job at RE Tokens and other people in the space to make the user experience very simple, where you don't need to understand everything. I relate it to a cell phone, right? If I got my cell phone here, we could talk about how this works. You know, it sends messages into space, and there's satellites, and they send stuff down. Or we could just say, hey, I could FaceTime somebody on the other side of the world in real time right now. That's what it does for you. So that's really our goal. So when you go to retokens.com or our YouTube and you're checking things out, you'll see that we really try to bring that home, where you don't need to understand the blockchain per se and all these components that are making this evolutionary real estate for you. You just need to understand what it does for you and your real estate project, like providing liquidity, or you as an investor, giving you that flexibility and liquidity to do things you haven't been able to do as an investor before.
Well, this has been a very interesting conversation. And I just want to direct everybody to your website again, retokens.com, retokens.com. You're going to find a lot more information there, including links to YouTube and blog and some very informative pieces. Before we jump into the rapid fire and close out this episode, Tyler, is there anything we should have tried to hit on yet here today?
I think I just want to bring it around to the fact that this is still real estate investment. We talked about a lot of tech aspects today, but fundamentally, this is still real estate investment. It still requires good real estate investment deals. It still requires good operators. It still requires the fundamentals of real estate. The tokenization and the digital aspect that we put to it is just adding amenities. So fundamentally, real estate investment is still the ice cream, but tokenization adds for whipped cream, cherries, and sprinkles on top. So don't get lost in the blockchain or some of the tech features. Just know that you want to do good, solid real estate investments, and tokenization can make them better.
Well, I appreciate you adding that. But if you're ready, we'll jump into the rapid fire and close out this episode.
Let's do it.
What lie do real estate investors often tell themselves?
Yeah, I think the biggest one I hear is that I don't have the money to do that. I can't, that deal's too big for me. I can't, do those things. And um, that's really not the case. If you do things like, syndication, for example, and educate yourself in there, you can do very, very large deals. It's just people think in terms of only themselves and what money I have in the bank or what the bank will loan me. But as you know, if you really make a career out of real estate investment and you're doing big deals, you're mostly using other people's money, and the banks look much more at the deal than they do, your personal credit. All those things matter, right? But you can do bigger deals by surrounding yourself with more investors. So don't shy away from some of those strategies if you are interested in getting in bigger deals. You can do bigger deals right now by getting the right people around you.
If you could go back in time and give your younger self a piece of advice, what would that be?
Yeah, for me, it would be to build more automation and consistency into my systems. In my early days, I'd ramp things up, get a couple deals under contract and close them and eat and start operating them. And then be like, okay, we need more. And so we'd go back and do more. And it was very up and down. We were always seemed to be, sprint, walk to where I think overall we probably would have done more volume if in the early days if we had more automation and consistency in the systems like I put into place in the later days.
Do you have a book recommendation, or what are you reading right now?
Well, I'm studying for my Series 7, so I'm reading that right now. But right now, I'm also reading Blitz Scaling by Reed Hoffman. It just falls in line with the RE token startup. But I'll give you a couple of books for your listeners that I think will be helpful as well. In my really early days, one of them that I liked was called Multifamily Millions by David Lindahl. I thought that had a lot of great, straightforward, usable stuff, and I used that in a lot of the multifamily that I purchased. So that was a golden oldie that I used. And then last year, I read one that I thought was really good for real estate entrepreneurs as well, called "Buy Back Your Time." The author is Dan. I'm spacing his last name at the moment, but it's called "Buy Back Your Time," and
It's like
that will.
Mattel, Mantel.
Yes, yeah, you got
Yeah.
it. Yeah, you were thinking of the same person, and that gives somebody some, those first few rungs on the ladder for scaling, because I do think this is a scaling sport, and that's really important if you're gonna make a career of it.
And finally, what single strategy or tool have you implemented that has had the biggest time saving impact to you or your business?
Um, yeah, for me, I think that was developing a criteria tool, getting really, really clear on the acquisition criteria. I think it's so easy to get excited about, this bundle of single family homes, this apartment building, this industrial. Oh, I want to do a land development. And it makes it almost impossible to be really, really good at one area. And if you want to be one of the best, it's about becoming an expert in just a few areas. And so instead of considering all the different real estate asset types out there, pick your favorite, two, let's say, and really become an expert on those. So when you're raising capital, the investors can tell this asset class, you have the team surrounding that. And the biggest reason that type of tool is so helpful because you build in your kind of your criteria for returns, what you pay your investors, is you can say yes or no to deals really, really quickly. So you can answer brokers or wholesalers or just for your own use of time and not get caught up. I think before I really started implementing this, not only did I look at too many deals, but it took me much longer to analyze the deals and feel confident on them to where when I started specializing, for me, that was multifamily and then ultimately storage as well. I was able to make those decisions much quicker, and my investors knew that I knew that asset type really, really well. And the brokers and wholesalers all knew like those were my asset types. And that just really increased my efficiency.
Well, this has been a fantastic conversation, Tyler. Again, it is retokens.com, retokens.com. Going to be a clickable link in the show notes, but really appreciate your time today. This was great.
Yeah, absolute pleasure, and thanks for having me on.